Okay, good morning, everyone. It is 11:03 and we are going to start our presentation for Finance 101 from Municipal Affairs. My name is Jordan and with me is Kauser. We're both municipal financial advisors. And we are going to give you a brief finance presentation today. Again, this is our second one. So if you attended the first one, thank you for attending again. But again, it's our second presentation. It'll be pretty much exact to the first one. But so for today's Hauser, would you like to introduce yourself?
Hello, good morning, everyone. Yes, my name is Kausar Kandakar. I am a financial advisor along with Jordan. Back to you, Jordan.
Okay, let me just share my screen here and open the PowerPoint. Hauser, you can see that okay? Yeah, okay, awesome. So, okay, so firstly, I would like to acknowledge that Alberta includes the traditional territory of the signatories to Treaty 6, 7, and 8. I also acknowledge the Métis people of Alberta who have a deep connection with this land. And we are going to start. This is the Municipal Finance 101 presentation. And here's the agenda. So here's the agenda for today. Kauser will start us off with municipal financial reporting. Then I will continue with basics of municipal accounting, financial indicator graphs and key measures, sustainability, borrowing. And then Kauser will continue with investments, budgets, tax rate bylaw. Then I'll have a brief topic on the asset term obligation, then finish with any questions. Now back to you, Kauser.
Thank you, Jordan. So I'm sharing my screen, and again, Jordan mentioned his chat box, and also if you guys have any question, anything is there, please leave your question to the chat box. And if we have time today, then we will get back to you, and we will have little live session. Is that if not, we will taking question with us, and we will answering momentarily, either email or either way. So I just came from my very sick fever, flu and everything. If I'm coughing in the middle of my presentation, please apologize me and my advance apologies to everyone. So let me share my screen. Jordan, you can see my screen, right?
Yeah.
Okay. So I don't need to mention the agenda is there already. Jordan mentioned our today's agenda is here. So let me see here. Okay, financial reporting. So we know the financial reporting is very important for all municipalities. Is there our MGS section 276 gave us some guidance on how do we do the financial statement for our financial reportings. There, each municipality must prepare annual financial statement of the municipalities for the immediately preceding year in accordance with the Canadian general accepted accounting principle, or used to call the GAAP, for municipal government, which are the standard approved by Public Sector Accounting Board, included in the CPA Canada Public Sector Accounting Handbook. Each municipality must make it financial statement. Okay, financial statement or a summary of them, an auditor report of the financial statement available to the public in the manner of the council consider appropriate by May 1st of the year of the following year of which is the financial statement have been prepared. So municipal use a financial statement to provide the assurance of the municipal accountability and transparency. Financial statement also provide assistance with the municipal long-term strategic planning and service as a tools for councillor and administrator to report the taxpayers there. And auditors reports. So auditor reports need to be, because there is a administration or other they wants to do their financial statement yearly basis is there, but the audit when it is audited financial report, that is authentication is there, then finding all kind of errors, anything miscoding, something like that. So auditors' duty is to ensure that municipal financial statement are clear of any material misstatement. Municipalities employs appropriate accounting policies. Accounting estimate used in the financial statement are reasonable. The audit cannot necessarily to expect uncover all irregularities, but often it does. Our recommendation is always please go to the auditors, their findings. Auditors reports is that usually the last year audit financial statement auditor has some recommendation is there. So follow through all this recommendation is there. Then what is their suggestion? What is their advice? If you can work with the last year audited financial statement, then can improve for the current year and future years financial statement. So any suggestion, any advice, if they are provided us, the municipalities is there. So there is another additional report, which is financial information return. Then we do have in our website new sample for municipal financial statement. There is a guidance for this one, guideline for how to use the financial statement. There is a sample. The financial statement process sample is there, so that's we call the new sample for it. So we can find all this information from there. So each municipality must prepare a financial information return respecting the financial affairs of the municipalities for the immediately preceding calendar years. As I mentioned, it is also due by May 1st, same as the accountant prepared the financial statement. The minister may establish a requirement for the financial information return, including the requirement regarding to the accounting principle and the standard to be used to preparing the return. Municipal Affairs also does post a mock template of financial statement on our website. The town of that's I mentioned that like new sample for you can find this link is there, financial reporting to use this municipal financial statement. Financial reporting to the councillor. So this is very important to that report is report to the councillor is there. So administration report financial information to council. Some of the financial information reported to council include the summaries of the revenues and expenses, operational report, checklisting for the information purpose, but some municipal doesn't want to include the checklisting. If you want to include the checklisting, is there just only check number and amount, not the payer name is there who is getting these check amounts. And also progress update and budget variances for major capital project is there. When I used to work in the municipal government, when I do, we have done, I had done like quarterly report. Some municipality like monthly reporting, some councillor, they want monthly reporting. But especially the smaller municipalities, it's hard for them to prepare every month because 1 to 5 or 4 people is doing most of the work is there. Again, it's what is their expectation, is there like councillor, what they are looking for. But at least quarterly, monthly reporting to the councillor, and they will understand. So usually some, as I mentioned, like revenue expenses, telling them actual budget items, the one column, another column in the middle, expense as of today, like reporting date, if it is March 31st, March 31st, and there is a variances is there, what is the variances budget to as of today's expenses is there. And then other column could be the notes areas that then telling the councillor is the what is the expenses is here, is this is a little over expenses or under expenses, what is the reason that, so telling little bit the notes areas, telling little summary or details is that then councillor will be understand all these things. So we have to keep it in our mind is there. Some people may have the finance background, but most of the people are not. A finance background is there when reporting to the councillor, or if there is a council meeting or something is there, there's a non-finance people, they can understand them in plain language. We can use is there like as a finance guy, we understand AR means accounts receivable, AP means accounts payable. We can tell them not to use the acronym is there like accounts payable or accounts receivable or like TS, not the tangible or tangible capital asset. We can explain them plain language, then any people can understand easily then what exactly is there. These terms of the acronym we use for or municipal administration use for that. And now accounting basic, Jordan will be discussing this accounting basis, so I will stop sharing and then I will coming back after he finishes his part.
Sure, thank you, Kauser. Just share my screen here. What do I do? There you go. Thank you very much, Kauser. So this is accounting basics. There we go. So we'll go over some financial statements here. So this slide shows a listing of the financial statements in a typical report. So the financial statements are published May annually, and that's when May 1st, that's when they are sent to the minister, or should be sent to the minister. And that goes by section 278 of the MGA. The statements are also posted on the municipal affairs website. So the financial statements that municipalities send to us, they're all posted. It's publicly available information, and that's same with the tax rate bylaws as well. And the statements are not only to assist for transparency and taxpayer money, but they're also to assist in long-term strategic planning. As mentioned, they ensure accountability and transparency of taxpayers' use of funds. And just remember that Section 280 requires each council to appoint 1 or more auditors for the municipality. So we do have a section on the Municipal Affairs website. There is a quick guide to financial statements to help you navigate financial statements, along with the new sample for documents as well that we recently doing a recent version. I think the last version was 2019 or 2021, but that will be coming out very shortly. So first of all, the financial statements, the financial position, or commonly known as a balance sheet. The statement shows the assets and liabilities of municipality, in addition to any surplus resulting from assets minus liabilities. In a company, the assets minus liabilities, that would be equity. However, in municipal government, that's called accumulated surplus. The assets are broken down their assets are broken down based on order of liquidity. So obviously cash and accounts receivable comes first, and then later on the tangible capital assets. The second statement on the financial statements is the statement of operations, or known as the income statement. This shows the annual revenues minus expenses of a municipality, and for the most part, like 50% of the time, revenue minus expensive just happens to be a negative number, and then the government contributions are added, which usually makes it a positive number. Then following, there is a statement of remeasurement gains and losses from changes in portfolio investments, and the statement of cash flows, which is related to the operations, financing, capital investing activities. And I believe this is probably the most important piece of the financial statements because it shows the viability of the financial statement or of the municipality and how efficiently they are operating. So some common accounting items, these are listed in the financial statement, as we just mentioned. Assets are from the balance sheet and represent items that the municipality owns that can also provide future economic benefit, versus liabilities are what the municipality owes or obligations to other parties. The net financial assets represent simple calculation of the liquid assets such as cash and accounts receivable, subtract liabilities. Accumulated surplus, which you mentioned, is resulting of the total assets minus liabilities. Then there's also accumulated operating surplus, which is also in the financial statements, which is the accumulated surplus adjusted for the change in measurement gains and losses. Accumulated operating surplus is also calculated by the sum of equity and tangible capital assets plus restricted and unrestricted reserves. Equity and tangible capital assets is simply the tangible capital assets of municipality adjusted for amortization and long-term debt. Restricted reserves are allocated reserves that can only be spent on the specific items that they are approved to be spent on. Versus unrestricted reserves, they're unallocated, so there's more freedom on where they could be spent. An asset retirement obligation, now on the financial statements, describes a legal obligation associated with the retirement of a tangible, long-lived asset, where a municipality will be responsible for removing equipment or cleaning up hazardous materials at some future date. And if you missed our first presentation on asset retirement obligation, there is one last one tomorrow at 9:30 as well. Deferred revenue is a liability on municipality's balance sheet, and often relating to grants that a municipality represents, or that represents a prepayment by an entity, say the government of Alberta, for a capital project that has yet to be commenced by the municipality. And then again, on and off with cash flow operations, which represents the operating strength of the municipality and helps determine as to whether the municipality is operating efficiently in the daily operations. So our next slide here is a diagram of the balance sheet and the income statement. So up above you have the assets, and there you have the minus the liabilities. That kind of equals your accumulated surplus. And an accumulated surplus is based off the equity, capital, tangible assets plus reserves. The bottom portion is the income statement, which has the revenue minus expenses. And everything in the financial statement should flow together. So to continue with the balance sheet here, Some of the most common items we see are cash, portfolio investments, receivables, tangible capital assets. Those are the most common assets. And for liabilities, it's most common are accounts payable, bank indebtedness, which could be your line of credit, deferred revenue, which could be grants, asset term obligations, employee benefit obligations, which would be pensions or pension obligations, and long-term debt, which is your loans to for capital projects. And your income statement here. So in addition, expenses. So in addition to what you see here, expenses can be commonly classified as salaries, wages, and benefits, contracted and general services, materials, goods and utilities, provision for allowances, transfers to local boards and agencies, bank charges and short-term interest, interest on long-term debt, amortization of tangible capital assets, and loss on disposal of tangible capital assets, and lastly, accretion of asset term obligation. So you can see here the income statement. The expenses there, besides the one I just mentioned, it's also listed usually in a schedule of the financial statements called the segmented disclosure, which usually breaks down the expenses into those categories: general government, protective services, transportation, planning development, public health and welfare, recreation and culture, and environment use and protection. And the revenues there are usually based on those categories: net municipal property taxes, user fee sales of goods, government transfers, interest income, license permit, and development levies. And if you missed it, we did do a revenue streams presentation as well that was recorded, and that should be posted online. If you have any questions or want to see that or can't find it, just feel free to email us or give us a call, and we'll get you the link for that presentation as well. So another statement listed on the financial statement is a statement of changes in net financial assets and debt. This statement begins with the annual surplus and deficit from the operation statement or the income statement, and then subtracts the acquisition of tangible capital assets and contributed assets, then adds back the annual amortization expense. So if you have your financial statements out beside you, you could kind of see the formula there. And then in addition, it further subtracts acquisition of supplies and inventories and prepaid assets, and the use of supplies, inventories, and the use of prepaid assets. This results in the equation that's the same as located on the balance sheet, with the financial assets subtract the liabilities. So in conclusion, when you come to the end of that schedule, it should match, the resulting should match the balance sheet schedule. And lastly, financial statements have quite a few notes at the back of them. So there's quite a few. This slide represents some of the more common notes listed in the financial statements. So it kind of breaks down the cash accounts equivalents, breaks down accounts receivable, usually into, say, taxes receivable as well. There's loan receivable in cases of loan owing, investments, deferred revenue, salaries, benefits disclosure, employee benefits obligation, asset term obligations, long-term debt. There's a debt limit note from our regulation. I think it's 66, Alberta Regulation 66/2000, that breaks down the debt limit and the debt service limit based on the ratio of the regulation, which is 1.25 and 0.25 times revenue. Then it subtracts the actual debt outstanding and debt service, and then you get the remaining debt limit, and it will show the municipality how much further they have to borrow. And if they're reaching their limit to borrow and about to go over, please call us, and we will start a debt limit extension request for you. It's very easy, so don't be afraid to do that. Some municipalities have to, and it's really not too much of a big deal. Then this statement has equity, tangible capital assets, and the notes. Equity, tangible capital assets breakdown as well. and any commitments or contingencies. So next, before we get into borrowing, I just wanted to show you a couple things very fast. You may know these already, so I apologize if you have seen already. However, I will just show you super fast again. If I could get my, oh my gosh. Sorry, I don't know why the whole thing won't go over, but so if you just so for the financial key indicator graphs measures of sustainability, as you know, every year municipalities submit their financial statements to us. Can't shrink it. Oh my gosh. Sorry, I'm having problems with my screen here because this bar is at the top. I'm really sorry. I'm just trying to show you a set of financial statements here. There we go. I did somehow bring them over this way. So every year, municipalities submit financial information return along with financial statements. It's a very long Excel document where municipalities input figures from the financial statements. And when you input figures into the financial statements, this is how we determine our financial indicator graphs. So going back to the financial indicator graphs, if you just Google Alberta maps and statistics, we go to municipal indicators. I want to show you how to get there yourself. And this is where all of that Excel data is tracked in one big database. And this is all publicly available as well. As you can see, I just Googled it. So this is how municipal affairs determines this. It just determines the sustainability of municipalities. We track various metrics, and hopefully most of them are green. If some of them start to turn red, or a lot of them turn red, our viability team will give a call just to see how things are going and just to note any concerns in that. I bet every municipality or like knows how to get cover ready. I just wanted to show it to you in case you don't. And if you have any questions, feel free to call us again. More than happy to show you where to find that. So we're going to continue with the presentation here from borrowing now. According to the MGA, borrowing means kind of these 4 items here. So it means the borrowing of money, including with and without limitation, money borrowed to refinance, redeem, or restructure debt. Borrowing means to lease capital property, including leased tangible capital assets, as defined in the CPA handbook. Borrowing means an agreement to purchase capital property that creates an interest in the capital property to secure payment of the capital property's purchase price. And borrowing also means the amount available to be borrowed on a credit card or any other credit revolving credit arrangement. So that could be a line of credit. So that's how the MGA determines borrowing. Borrowed money must be used for the purpose that it was borrowed for, and amendments to a borrowing bylaw must meet the same conditions as applied to passing the original borrowing bylaw. So that's if there's a change in a borrowing bylaw. So for example, you have a capital project that increased in cost, you may need to amend that current borrowing bylaw with the same conditions used in the original one. So borrowing, as mentioned, the key things here in the MGA: amount of money to be borrowed, purpose money to borrow, maximum interest rate, and source of money to repay the borrowing. So this relates to section 251 of the MGA. And there are, so regard to borrowing section 251, states that borrowing bylaw must be advertised, but there are a couple exceptions for advertising. And well, there's more than a couple. There's definitely a few, but I'll just name off a few exceptions where you wouldn't need to advertise. So, for example, Section 287 being short-term borrowing on capital property. So this would be made for borrowing made for the purpose of financing of a term of less than 5 years. So that less than 5 years would not need to be advertised. So another example would be Section 261 would be refinancing. So the purpose of the borrowing would to be to refinance the unpaid principal of one or more existing borrowings. The amount or term of the proposed bylaw do not exceed the unpaid principal of the borrowing bylaw, and the longest remaining term of the existing borrowings, the bylaw is not required to be advertised. So again, so that's section 257, 261, and some sections in between there, you can see in your MGA that there are exceptions that where advertising is not required. And also for borrowing, a side note, for regional service commissions do not need to have a borrowing bylaw, although it is recommended that they have one for transparency purposes. I have had that question before as well. So continuing with borrowing, municipalities have the benefit of accessing the Alberta Capital Finance Authority, which is now an arm of the Alberta Treasury Ministry. And they have a great website. If you just Google Alberta loans to local authorities, they have a great website with loan calculators, borrowing bylaw templates, and timelines. And it's very useful. Again, municipalities could choose to borrow wherever they like if approved to do so, but Alberta Treasury does have comparable rates, but it is worth comparing against other financial institutions as well. It's just very important that borrowed funds can only be used for the project identified, and the borrowing bylaw that any borrowed should be included in the capital plan as well. So you want to relate the borrowing to your capital plan, and the capital plan relates to the budget, which the council determines early on. So there's short-term versus long-term borrowing. Just to go back, a short-term borrowing is used most likely for smaller projects with loan payback periods of less than 5 years, so loan of less than 5 years. And long-term borrowing would be for larger project for loans of greater than 5 years. Here's a question. So as per credit lines, since there's no defined payback period, and the bank could call on these facilities at any time, most municipalities consider these facilities as current liabilities, and that's considered short-term debt. With most municipalities, I know the banks would do an annual review of your financial statements if you have borrowings, and then usually sign like a service agreement or terms agreement, and that kind of renews the credit line for another year. So that's which could be another reason why the line of credit would be considered short-term borrowing again. And there's no defined prepayment structure or payment structure either with line of credit versus a loan. Then there's borrowing for local improvements. So in this case, a borrowing bylaw that authorizes borrowing does not have to be advertised if the amount to be financed by the local improvement tax to pay for the local improvement is equal to or greater than the amount that the municipality will contribute to pay for the local improvement, other than through the local improvement tax. So that's another exception for advertising. And then this next slide here, the slide here is straight from the Alberta Loans to Local Authorities webpage, and there's a good PDF there that explains a timeline for passing a borrowing bylaw. So firstly, a borrowing bylaw receives first reading. Advertising must be done for 2 consecutive weeks. Then there's a petition period for the next 15 days after the last day of advertising. Then after the petition period is over, the borrowing bylaw receives second and third reading before it is signed and passed. So again, that's on the Alberta Local Authority's website. Very useful when doing your first borrowing bylaw. And then there's petitions. So borrowing bylaws are petitionable. That's section 231, number 3, requires that a petition for a vote of electors on a proposed bylaw is required to be advertised under Part 8 and will be and filed with the CAO 15 days after the last date which a bylaw is advertised. And again, a petition must be signed by electors of the municipality and equal to the number of at least 10% of the population, and that we found in the MGA as well. We haven't noted the section, but it is there because we found it not too long ago. We'll note the section for you. And very important as well are our debt limits when it comes to borrowing. Every time municipality borrows money, the debt limit stays the same, but the debt capacity reduces. So a municipality cannot borrow if the borrowing will cause the municipality to exceed their debt limit. That's noted in the financial statements and also related to the debt limit regulation of 255/2000. The debt limit refers to the amount of debt municipality can carry, where the debt service is the maximum and annual amount municipality can dedicate to the debt service cost. So in debt, when you think of debt service, think of that being your principal and interest payments annually towards that debt. And again, that's debt limit regulation 255/2000. And in this regulation, it specifies that for most municipalities, there are a couple exceptions for a few municipalities, but not many, that the debt limit is set at 1.5 times revenue, and the debt service limit is based on 0.25 times revenue municipality. And like I mentioned earlier, if municipality is approaching the limit or the max and wants to go over, please have them call the municipal affairs first, and we will help them hopefully attain an approval for a debt limit extension, which all have expiration dates as well. Debt limit extensions don't last forever. And continuing here, there's loans and guarantees. So this relates to section 264. A municipality may only lend money or guarantee the repayment of a loan to a not-for-profit organization or one of the municipality-controlled corporations. Both a loan or guarantee must be done through bylaw. It's noted in section 265 and 266. And loans or guarantees may have an impact on borrowing capacity. No municipality can enter into these things if it will cause municipality to exceed the debt limit. Again, the minister may approve your application. And then, so going further, so section 264, loan and guarantees only to municipal corporations, nonprofit. 265 states loan bylaw. 266 guarantee bylaw. And loans and guarantees do impact the debt limit. So if the municipality does want to borrow to municipal control corporation nonprofit, that lending does count as part of the debt used up in the debt limit as well. And now Kauser will continue with the investment section here.
Oh,
Looks
thank you,
good,
Jordan.
Kauser.
Thank you, Jordan. Yeah. So you can see, right? Okay, welcome again. So investment. So can municipality invest? Like they do have some surplus money? Yes, municipality can invest. Their money is there, but there's some specific areas they can invest. Investment restriction by the MGA. It's MGA we are talking about, and I know that somebody individual is working long term is there. Like you guys know that this is our Bible, right? MGA. Everything we will be work with the MGA. Everything MGA is our guidelines. MGA is telling us what we can do, what we can municipal can do. That's so always we are referring MGA means MGA. So investment restricted by the MGA and regulation, that is section 250 of the MGA, explain that the municipality may only invest its money in this noted area. The Crown in right of Canada or the province, for example, an agent of the Crown or province or territory. Municipalities, school division, district, health region, Regional Health Authorities Act, Regional Service Commission, issued or guaranteed by bank, treasury branch, credit union, or trust corporation. Units in pooled funds of all or any other investment noted above. Is municipality can invest it to share market? Not really, but yeah, must be. If it is the case, it must be approved by the minister. So does not apply to the municipality to invest in a control corporation. There is investment regulation, is Alberta regulation is 66 by 2000. Yeah. This is the budget. On next slide is there. We have already budget. Our meditation is there, but this is a kind of quick, like it's a budget is finance elements is there. Just so we have included here budget to quick brief discussion the budget. And again, the budget is the most important policy council will set annually. It is a statement of municipalities' priorities that set spending limit on the programs and services in municipality will offer. Without budget, like in our personal life or in business or in municipalities is a kind of business that provides services, program and services to their residences that they need to have their budget is there, and also MGA guide us to prepare budget for each municipality is there. So it is also a political document representing the collective judgment of council. It allows management to compare the against previous years to determine the efficiency and effectiveness. So what they have done the last year, what they will be doing this year, what we will be doing the next year is there. That is their document to determine or find out there any discrepancy, any gap they found in the previous year budget. It enables municipalities to plan and provide information about the future that can be used in making trade-off amongst policies and spending. Some question that municipal staff and councillors should be asking when the budget time is there, budget preparing time coming, what are the municipal demand in the future, road, sewer, water treatment, etc. What is our population demographic? Is this age demographic or young generation is coming? What is the demographic is there when the population is growing or new population is coming? How to handle this kind of situation? This kind of question will be asking, will the municipality still be viable in the future? That's the very important things is there, because we did not see here any bankruptcy in our Canada in Alberta, but we have seen many of them in states, especially everybody knows that Detroit and other county in there. So we don't want to see, I mean, like when preparing budget and other stuff is that then viability is very important to prepare with this one. Long-term strategic planning, corporate planning is there that is ties with this budget. And annually council must adopt a budget. So I think my maybe next slide will be showing the like excuse me, my like 3 years financial plan or 5 years capital planning. So capital planning and budget is totally different. I think is there some people thinking about, oh, we do have a 3 years operating planning, 5 years capital planning, why do we need a every year budget? Because planning will be just change every year what situation is changes, or council are planning for new plan, new items would be included there. But each and every municipalities must need to approve their annual budget. Council must adopt a budget that includes both capital and operating expenses and must be passed by December 31st. If it is not possible to pass by December 31st, the regular budget must need to be approved by interim budget. Otherwise, it cannot spend new year starting in January 1st. Municipality must have the budget in place first before they can pass a tax rate bylaw. So administration should express council how change in the budget will be impact the tax rate when the budget process time is starting. Then there is a little calculation is there, if 50,000 increasing budget, what is the effect of the tax rate, or what is the effect on this one, blah blah blah, something like the calculation. Administration must showing illustrate to this process to the council, then council will easily understand what is the budget impact on their next year overall expense and overall tax related things is there. So, but most of the councillor, they like to discuss the tax rate. Oh my goodness, tax rate 10%, 12%, 11%. But that shouldn't be discussed when the tax rate bylaw is passing. That should be discussed when budget passing time. So there should be only limited discussion, financial resource that must be utilized, provide municipal services to the taxpayer. Municipal staff must set which operational and capital items have prioritized over one another. So a process should be established to evaluate the competing needs of services in order to maximize the use of funds in the area of the highest priority to the municipalities. So there is there's unlimited, there's no unlimited resource there, so they should be prioritized. Councillors should be prioritized, administration should advise them, and so how resources is there, how, and then with this limited resource, and then prioritize the priority for the municipality service and program and services provide them. So ultimately a council will be decided because what is the municipality's priorities there, because budget is council or budget is there. So administration can advise, but at the end of the day is a council or budget. Each council must establish a procedure to authorize and verify expenditure that are not included in a budget. So all expenditure should be included within the budget and authorized by council. However, there are some unexpected expectation which could be related to an emergency or expense that are legally required to be paid. Like winter time is there, like this year luckily there is not enough snow is there. If huge snow is there, snow plowing is the first priority for the municipalities is there. But again, if smaller municipalities, if they have one grader is there, it's broken down, so it need to be fixed right away. Extreme cold and extreme snow winter time, so need to be have some emergency fund is there to repair this one, and its cost is 10, 12, 15, 20,000 is the right away. So current expenditure they have like an example for the for goods that are consumable, for that have a short life, that is office supplies, fuel, electricity. For expenditure for constantly recurring expenses, which is a salaries, wages. So a councillor must have a policy for expenditure that are not included in the budget. So if they don't have any policies, is that they cannot spend any money is the unbudgeted item. So that's why they should have some emergency fund, have some policies that if any unbudgeted item need to be spent, then they can follow through their policies is there. Council also must be aware that if they make any expenditure on behalf of the municipality that are not approved in the budget, they be personally liable for the cost. So my next slide will be showing the personal liabilities a little bit, touching their personal liabilities. So these are civil liabilities there. Are councillors civil liable for their expenses? Yes, they are. So this is always I mean the like in our MGA section 249 and 275 layout areas where a councillor could run into a problem if they vote to do any of these things. Spend money not authorized, for example, or who works in authorized by any mayor or any councillor in the SL's council could decide not to pay because it was an unauthorized expenditure. Council can only act by law or resolution. Spend money borrowed or guaranteed for the project and something else without approval or new bylaw. Support for that will cause a municipalities to exceed its debt limit. So always just remember that everything must be authorized by council via in the like either bylaw or resolution, and you cannot exceed the debt limit. If any money is spent, borrowed, or guaranteed without authorization of the council, or a council voted for an extension that will cause the municipality to exceed its debt limit, it's liable to the municipalities for the expenditure or the amount spent. And tax rate bylaw, it's another fun topics. On the tax rate bylaw, time is coming. Always, most of the councillor, they are worried about tax rate is there. Oh my goodness, my residence is getting mad, blah, 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 something is there. So the tax rate bylaw passing times is a law. As I mentioned earlier, it should be the limited discussion. Is that when budget time is there, that should be the discussion, that should be the little calculation to show what would be the effect of this tax rate if past this budget is there of huge budget compared with the last year is there. And this is the like tax rate bylaw is the like simple process is there. The municipal assessor prepares the ST assessment for all property in the municipalities other than the designated industrial property, commonly referred to as a DIP. The provincial assessor is responsible for this and send out this rate early in the year. Municipal assessment must reflect characteristics and physical condition of the property on December 31st of the year prior to the year in which a tax is imposed. MGA imposed under Part 10 in respect of the property and the valuation and other standards set out in the regulation for the property, which is mentioned in section 289. Each municipality must prepare annually, not later than February 28, an assessment roll for assessed property in the municipality, again except DIP. Same DIP is February 28, also deadline. Assessment notice must be sent no later than July 1st of each year. So, and tax rate bylaw is like here is a simple calculation is there like revenue requirement. Like if 100,000 revenue requirement for this year, and then assessment value is $10 million. So divided by revenue requirement 100,000 divided by assessed value, that would be the tax rate. But if people are get confused always tax rate and meal rate is there. If it is the meal rate is there, so it is simple calculation. Budget requirement divided by assessment times 1,000 is meal rate. But if not times 1,000, budget requirement divided by assessment, that is the tax rate is there. So again, I mentioned that council has no control over the equation. The only portion council can control is the budgetary revenue requirement. Administration must ensure council is aware of the effect of the proposed budget on the tax rate during the budget discussion. And if budget reduction are made, council must specify what programs or services will be reduced and not simply ask administration to cut it certain dollar amount or percentage, as council is responsible for setting the budget, not the administration. If council said, oh my goodness, it seems like 10%, 11% tax rate is there's very high, they cannot simply tell, okay, just subtract $50,000 reduces $50,000. They cannot say like that. They have to specify which project they need to discontinue this year, or budget will be reduced. If it is soccer field is there 200,000, they can tell, okay, stop including the soccer field this year, or maintenance soccer field or ball diamond this year, or maybe rec center repair and maintenance $50,000 cut this year to this one. Then you have to go back again budget to change the budget item, and then again pass the tax rate bylaw is there. But after the approved tax rate bylaw, approved budget and tax rate bylaw, they cannot simply do this one to reduce the tax rate is there, or tax rate bylaws there. So again, budget is their councillor budget, not the administration. Councillor is responsible for doing their budget, or preparing, the passing the budget for their municipalities. So yeah, now it is the asset retirement obligation. Jordan will be discussing. We'll have this is the like limited discussion today. We will have a full asset retirement obligation session tomorrow morning. If you guys are interested, we will discuss more. I will hand over to Jordan and stop sharing my screen.
Hello, and thank you, Kauser. Yes, yeah, so as mentioned, last week we did have an asset retirement obligation presentation, which went into a bit further than today's presentation. And as Kauser mentioned, tomorrow we'll be doing the same asset retirement obligation tomorrow as well, which will go into a bit more details than you'll see today as well. So feel free to sign up for that and attend that. So continuing with asset retirement obligations. So what is an asset retirement obligation? So municipalities need to make provisions for the retirement of tangible, long-lived assets to bring the asset back to its original condition after the municipality is done using the asset. Changes to the liability from year to year for subsequent measurement, and these would be examples of appreciation expense, amortization, asset retirement obligation cost, revised estimates, etc. These should be considered as part of the budget process and reflected in the budget documents, very important. And the impact of asset retirement costs on projects. So for example, upon acquisition, development, carrying costs incurred should also be considered and incorporated into business decisions. Asset retirement obligations mainly relate to buildings, equipment, and land improvements. A municipality may estimate the nature and extent of hazardous materials in its buildings based on the potential square meters and the average cost per square meter. to remove and dispose of the hazardous materials. The estimate of these obligations is mainly based on assessments provided by third-party experts, internal experts, and or engineers. So some common examples here. There's a number of common retirement obligations municipalities should encounter, and also note that not all municipalities will have an asset retirement obligation. Some won't have any, some will have one, and some will have many. So in that respect, not all municipalities are the same. But some common items include buildings with asbestos, underground fuel storage tank removal of radiologically contaminated medical equipment, so those being X-rays or MRIs, wastewater or sewage treatment facilities, and any cost to return the properties under lease to original conditions. And lastly, closure and post-closure obligation associated with landfills. So those are some common examples. So this is some criteria to be met. So it must be a legal obligation to incur retirement costs. A past transaction or event has occurred. Future economic benefits given up, and a reasonable estimate can be made. So again, it's best to seek the help of assistance of a professional engineer or accountant when determining asset obligations. The government of Alberta has tried to research more of the subject and provide materials, but accounting firms and engineers are the experts in this area for now. We just don't want to publish anything that may have negative impact or liability unknowingly in the future. But as time progresses, we'll be more and more confident about this asset retirement obligation topic. So our next example is a great flowchart, and this was designed in reference from the BDO publication that was published online in July of 2020, and it was titled Asset Retirement Obligations, a Practical Approach to Public Section Standard, the 3280. So again, Asset Retirement Obligation Standard is also known as the Public Standard 3280. Just briefly reviewing this flowchart that BDO put together excellently, is so for first of all, we have to determine, is there a present obligation with the asset, or is there a present obligation associated with the asset? And if there is, does the obligation result come from the acquisition, construction, development, or normal use of the tangible capital asset? And if there is, again, is there a legal obligation to occur asset retirement obligation costs associated with a controlled tangible capital asset? So if all of those three are correct, then yes, Public Sector 3280 applies. However, if there are no's in this flow chart, or no, if there are no's in those three questions I asked, then you can continue with the flow chart and drill down, and you'll either have the results of do nothing, or it'll refer you to a similar section, which would be section Public Standard 3200 based on liabilities, or section 3260, which is liability for contaminated sites. So again, this is a great flowchart that BDO put together that will help municipalities to determine their asset obligations. And that actually concludes our presentation today. Here is the time is 12:06. So I will stop sharing, and I just wanted to, I didn't give our contact information actually. Sorry about that. This is our contact information here. My email, Couch's email, and our general phone number. If you haven't contacted us already, there it is. Or just feel free to reach out in any way to Municipal Affairs you would like to speak to. a municipal advisor. We have various expertise here to try to help you any way we can. But in that respect, thank you for attending today. I don't see too many questions in the chat. Or well, actually, I see a couple. How long is the presentation going? Okay, and we done actually. Okay, yeah, that's it. So, yeah, I guess people want to get out of here, I guess. So, thank you very much for attending. You have our phone numbers, you have our emails. Please reach out anyway tomorrow. Asset retirement obligation presentation again, and I'll leave it to you, Kauser. That's it for me.
Yes, thank you so much everyone for participate. Yeah, as Jordan mentioned, you do have our contact number is there. Please feel free to leave us any question, anything. So we'll get back to you guys. And other than, I think it's done for the day. We'll be here tomorrow morning at 9:30, right, Jordan? I believe it's
Yes, yes.
9:30 is ARO1. Little details is there ARO, and again ARO is new items is there if somebody is interested. And thank you so much and have a wonderful afternoon time.